Hello and welcome back to Coinscrum Markets. I'm delighted to be joined by Patrick Heusser, Head of Trading at Crypto Broker AG. Welcome back, Patrick.
Thank you. As always, a pleasure to be with you.
Yeah, well, it's been a couple of months since you came on. Ruptus from your firm was on last month. Things have changed a little bit in the last month. Everything was spinning around at the dizzy highs. We've seen this big turnaround. Obviously, that was getting on for a couple of weeks ago now. But let's touch on that. Just get your thoughts on it in terms of what were the triggers, because I know you sort of look at technicals at crypto on your desk over there, but everyone's looking for a trigger. Was it a case of the market was just overbought and anything was going to make it turn, or were there some triggers out there which actually did bring it
down? And I think it's, as usual, it's a bit of everything, because I'm not a believer in single triggers. And I listened to a few people I respect in the market. For example, the head of trading at Alameda Research. He was giving an interview, got confronted with exactly the same question. So what was the trigger, or what happened? And in the end, he was also trying to make the point that the market went a little bit ahead of itself between probably April till end of April, by seeing a lot of leverage coming back into the system, even though the Bitcoin dollar price didn't move too much, because everybody was focusing on Ether, and Ether made almost 100% in a very short time, and kind of holding up the whole market. And it was also misleading me, because I thought when we broke down off this rising wedge in Bitcoin dollar, okay, that's it. This is the sign that the top, the intermediate top has been reached. Now it goes lower, and then the bloody Ether was dragging the whole market up, and I got sort of distracted. And then the liquidations were basically the first trigger or ignition of the sell-off, and then all these retail guys got pushed out of the market. And then, coincidence or just bad luck, miners panicked a bit on the headlines of Chinese regulators trying to clamp down on, let's call it, dirty mining. And when the market is already weak on the derivative side by being hit on a lot of liquidations, if then spot sellers come in, the market can just not handle it, right? And then we had this second wave, like BTC and Ether going down. Alts were like holding pretty well, and then out of the blue they came as well, and obviously even lost a lot more than what Bitcoin and Ether lost.
Yeah.
And that was for the retail guy, that was the killing machine. They were all, or most of them, got beaten very, very badly in those few days.
Yeah, I mean, unfortunately, on that side, it's patterns we've seen before. A lot of retail investors come late into the market on the back of a lot of the headlines and the kind of a lot of the noise that we saw on Twitter, which we've probably seen. I think there was saw some analysis this week in terms of how recently coins, or how old coins have been that were moving, and kind of analyzing. It was a lot of the liquidations were quite recent purchases as well. So sort of long time holders are kind of still hodling in there. I mean, I think, look, there's a couple of questions come out of this. You're going to have the naysayers saying, right, that's it. It was overdone. It was ridiculous bubble again. That's the top. Everyone's going to lose interest now. Maybe, there's not as many cheerleaders as there were at the beginning of the year, or they were quiet. And we'll come on to it in a minute as well. But just looking at the whole DeFi market, it was a very useful, and we've seen this before. We definitely saw it last year in March when we had the big sell-off, and seen it again in terms of a stress test of that technology, which is is very useful for the market in general, to understand how it's going to kind of evolve going forward. We'll come on to that in a minute, but look, it's not all been bad news either. I mean, get your thoughts in terms of where you think we are in the longer term picture. But at the same time, in the last week, we saw Goldman's kind of finally kind of throw their hat in the ring when they were kind of flip-flopping a little bit last year, and put out a quite comprehensive report saying they do consider crypto as an asset class now. We saw Ray Dalio make very positive comments, and even I think today or yesterday, Carl Icahn as well, saying his fund could well be looking to invest broadly across the space in various assets, and talking numbers when he was pressed of $1 billion to $1.5 billion. So, people are still interested in the longer term. So I guess that's a good sign. But what's your thoughts in terms of maybe the longer term picture? Are you in the camp of, look, it was just very overdone, we're in a long term bear market, or is this just an overdue consolidation?
I think I'm in the camp of this is an overdue consolidation, and I'm not quite sure how long the consolidation will take. Long term, I see the prices of certain assets a lot higher. But what I, again, sort of figured out over and over again is that regulation will take a lot longer than what I think. It's a little bit like if you build up your own company, and getting cash flow positive always takes a lot longer than what you think and what your plan is. And regulation is needed to make sure that the crypto or digital asset market can actually mature and be able to be ready for the big money coming from traditional finance into that space. I mean, there's no way that this market can grow further at that pace without having some sort of regulation that the money that is trying to flow in can actually do so. And regulation, as I said before, it usually takes longer than what everybody thinks. So that consolidation might take a little longer. But as you pointed out correctly, a lot of visionaries and brave guys, and they're known as being brave. They go in, and when they go in big. They're ready, and they're probably going to be the big winners at the end, because they're going to be in, even though we're at whatever $40,000 now, and everybody says it's expensive. They will be laughing in a few years when, I don't know, you sell it out for 250,000 or even higher, the Bitcoin price. So hopefully the consolidation phase will bring more developments, further developments, new areas of where the technology can actually bring use cases to the, I always say real world, but I mean, even the cryptocurrency world is the real world, but that the bridges between traditional finance and crypto or decentralized finance are getting built. And it's good that we have consolidation phases, because then it actually gives them time to develop, because when the market is so crazy, no one builds. Everybody is just trading and is trying to make the most money out of it.
Yeah.
And now reality sets in, people go back to their desks. Okay, I should do some work now.
Yep. Again, we've definitely seen that time and again. So, I mean, areas of interest being developed, and as I mentioned earlier, now being stress tested again, importantly, so stress tested. Couple of points I think we want to talk about around, well, two interesting ones. Scalability has been a big question of DeFi markets, because as we saw, there was a bottleneck last year. Costs were clearly going to be too high unless something was done to improve the scalability around decentralized exchanges. So Uniswap recently launched their version 3 upgrade. It wasn't an immediate shift, but a gradual shift of liquidity, which is the kicker really, from version 2 to version 3. What's your thoughts on that?
Well, the version 3 was badly needed due to the capital efficiency that is, to my understanding, the biggest advantage now of version 3. And with better or more capital efficiency, the liquidity is again much deeper now on Uniswap, and we do need deep liquidity for playing with the big boys' money. So It's good. It's a solid foundation that the decentralized exchanges are getting to a stage where they're going to be really, really liquid. Um, Same like centralized exchanges. So there is almost no difference if you execute a large trade on a DEX or a large trade on a centralized exchange. So a very good development in my point of view. And the scalability you mentioned is obviously still an issue. I mean, Uniswap is on Ethereum, and Ethereum showed their weakness again during the crash, that people couldn't move stuff. The chain was clogged up, gas fee was super high. But I mean, there are other solutions out there. Let's name it. Solana ecosystem is out there working, and it worked really well during the crash. We have the Terra Luna system, worked kind of okay, but it's also something that's out there. And then everybody seems to kind of forget about the IOTA project, which is also very cheap in fees, very high speed in transaction. So there are other solutions out there. We just need to figure out how we can basically build bridges between the different blockchain systems or ecosystems. And even that is being tackled already. So we have bridges between Solana and Ethereum. We have bridges between Ethereum and Polkadot. So, but it needs a bit of time. But it's a matter of time till these ecosystems are so well connected with the bridges that issues like we have seen before when markets are crashing, you can sort of move to other ecosystems that are working better. And then scalability is not that much of an issue anymore.
Yeah, I mean, it's going to be very competitive. I guess it's interesting that you mentioned earlier, I mean, Ether's outperformed Bitcoin. I mean, ETH versus Bitcoin has been very strong since Bitcoin made. I mean, it's doubled since Bitcoin made its high in mid-April. But in terms of, if you look at the market cap, ETH does have these issues. I know they're addressing it and kind of fast tracking towards their proof of stake model. But in terms of market cap, ETH is well ahead of the next competitor. Do you see this as a future trading strategy of like spreading between ETH and its future competitors and see those gaps closing?
It's definitely something we are looking at when we sort of manage our internal portfolio, that you have to have a bit of let's call it ether hedge, kind of. I don't try to find the ether killer, because I don't think that exists. But as you said, some of these projects in market cap terms have some potential to close the gap to Ethereum. And it's just a matter of how you deploy your capital between these tokens, but it's definitely worthwhile. Think about it, which one you're going to buy as well further down. And as you mentioned as well, I mean, they will go to proof of stake at some point. I mean, if they reach all these triggers that are built in, and the sharding will come, so some scalability improvements are on the way. Let's see. I mean, I still need to see it, right? It looks good on paper, but I want to see.
Yeah, I mean, when the news broke, or when the debate broke, let us say, not the news, because it's definitely not news, but when the debate broke around when Elon Musk started kind of made his comments about Bitcoin's energy consumption, I mean, immediately after, you did see some strength from other proof of stake networks. I know Cardano was performing, ADA was performing very well at that time. When the market eventually turned, everything went with it. But again, I guess as a longer term strategy, that's going to be an ongoing debate, and everyone has their opinion on it in terms of Bitcoin's energy consumption. But again, in terms of hedging, and people are thinking about that, then proof of stake networks have got to be consideration purely on that basis alone. Because if that's going to become a common theme from what we've seen in China, I know it wasn't just about banning mining because of energy consumption, but if these memes hang around for a long time, then they could clearly have an impact. So definitely one to watch out for. Just conscious of time, one thing I think, again, one other dynamic that has changed from earlier in the year, definitely with the sell-off, is, which maybe touch on as a last item, is the futures funding rates. Obviously, big contango, which has come right down. What's your thoughts on that and what we're seeing in the market there?
Well, the first thought is it's a pity, because it was a money-making machine for most of the trading desks out there. It was easy money to pick up.
Yeah.
Currently, it just shows that we are at a neutral point in terms of price and in terms of hype. So consolidation makes absolutely sense in that terms, right? And there's no clear bullish or bearish stance in the market.
Mm-hmm.
In general, because it's not only the supply and demand or the bullishness or bearishness of the market which determines the curve, the futures curve. I believe, in general, because there is not enough dollar in the system and there's always a lack of dollar, the contango will be the one which is prevailing at the end, or on average you see more contango than backwardation in the market. So I'm pretty sure it comes back at some point, and some of the desk will jump on these trades again. But obviously we had, during February and April, we had a lot of calls with traditional asset managers trying to structure a trade to pick up that yield. And it's not that easy, right, to, as a regulated entity, to provide that yield in a structure to external asset managers. And now with the yields being collapsed, people are not really interested anymore, but they will come back. And I think the companies that are ready to offer it to the non-crypto world, they will get some capital deployed right away if the contango goes back to like 30% per annum.
Yeah. Your free lunch can't last forever, but it may return.
But it will return. It will.
Will return. Excellent. Patrick, it's been a pleasure speaking to you as always. Thanks for joining us. We look forward to speaking to you again next month. Have a good month out there.
Thanks, you too. Thanks a lot.